Hey everyone, in past videos I've mentioned that I own growth stocks and my plan has always been to use the profits from those growth stocks to fuel my dividend investing strategy. Today I want to dive into Fubo TV and the very exciting upcoming catalysts that could shape its future. I've been holding Fubo TV stock for the past 4 years, patiently riding the ups and downs, and now I'm excited to share why I am so bullish, especially with the game-changing merger with Hulu Plus Live TV on the horizon. Let's dive into the key reasons this merger could send Fubo stock soaring, and I'll keep it tight for 5 minutes. First, let's talk about the merger itself. Fubo TV, a sports-focused streaming platform, is joining forces with Disney's Hulu Plus Live TV to create a powerhouse with over 6 million subscribers, making it the second largest digital TV provider behind YouTube TV. This deal, announced in January of 2025, combines Fubo's live sports expertise with Hulu's massive on-demand library and Disney's content muscle, including ESPN and regional sports networks. The result, a hybrid streaming service that offers live sports, entertainment, and flexible bundles at competitive prices, appealing to a huge audience tired of overpriced cable. Now for the bull case. Let's start with the approvals needed. The US Department of Justice is reviewing the merger for antitrust concerns, given Disney's heavy influence in sports content. The DOJ's decision is expected by late August 2025, and while there is a chance of delays or challenges, Disney's $220 million antitrust settlement and Fubo's $130 million termination fee, if the deal falls through, provide a solid safety net. Posts on X show optimism, with some investors betting the DOJ will greenlight this by Q4 of 2025, though it could stretch into early 2026. Next, Fubo shareholders will vote on September 30th, 2025 to approve the merger. This company has already filed a proxy statement, and with Fubo's stock surging 239% after the announcement, sentiment among investors seems strong. So, what does this mean for Fubo's stock price? The merger's a massive catalyst. Fubo's Q2 2025 earnings showed a surprise profit with $20.7 million in positive EBITDA, a huge turnaround from last year's losses. Pair that with $285 million in cash reserves and a $145 million loan from Disney, and Fubo's got the financial firepower to scale. Analysts are calling for a moderate buy with a $4.06 price target, but the stock's already jumped from $3.48 to over $8 in some projections, driven by merger hype. If the deal closes, the combined entity could hit $6 billion in revenue, leveraging cost efficiencies from Disney's scale to lower content costs and boost margins. That's a recipe for serious upside. For investors, this merger isn't just about size, it's about strategy. Fubo's sports focus plus Hulu's content creates a sticky platform that could rival YouTube TV. Even if the DOJ pushes back, Fubo's standalone moves, like its planned sports bundle, keep it competitive. But the real kicker, the merger could unlock long-term shareholder value by positioning Fubo as a leader in a fragmented streaming market. To wrap up, I am thrilled about Fubo's potential. The DOJ and shareholder approvals are the final hurdles, but the financials, market positioning, and investor buzz point to a bright future. Now regarding my position, I've seen the stock drop about 95% from its all-time high back in late 2020, and personally I am down from my average entry price of $8.42. But I'm committed to riding this wave until we hit those upper resistance zones in the teens and 20s, where technical analysis shows potential ceilings based on historical patterns and Fibonacci extensions. I'm ready to cash in on this and fuel those gains into my dividend portfolio. What do you think? Bullish on Fubo or playing it safe? Drop your thoughts below and let's keep this conversation going. That's it for today. Hit the like button, subscribe, and I'll see you in the next video.